Welcome to the Bloomberg Markets podcast. I'm Paul Sweeney, alongside my co-host, Matt Miller.
Every business day, we bring you interviews from CEOs, market pros, and Bloomberg experts, along with essential market-moving news.
Find the Bloomberg Markets podcast on Apple Podcasts or wherever you listen to podcasts and at Bloomberg.com/podcast. You want to talk some cars, Matt? Some German cars?
I would love to, not just German cars. You're referring to the Volkswagen story.
Yeah.
They're made everywhere,
yeah.
Right? And China is, I think, the real problem here.
All right, let's go to Anika Raymond, Autos Industry Disruption Reporter. I didn't know we had a disruption reporter from Bloomberg News joins us here. So, Monica, let's start with Volkswagen. What's the news coming out of our good friends from Germany?
Thanks for having me, guys. The biggest news of the week, I would have to say, is the deal with Xpeng. Basically, Volkswagen came out yesterday and said that they're investing around $700 million in this EV producer in China, and it's really a first for Volkswagen. It's basically sort of them admitting, we can't really keep up on the Chinese market, so we need to partner with somebody who really has their finger on the pulse of what Chinese consumers want.
It's amazing because, Volkswagen is usually the biggest or the second biggest car maker in the world, right? How key is the Chinese market, Monica, to Volkswagen? And is it that important to other manufacturers?
Oh yeah, China is absolutely huge. It's basically like 30% of their revenues, and it has played a key role for them over the past several decades. And Volkswagen was really a star there, the market leader for the past decades, because they were banking on that German reputation of engineering ability and that cachet as a foreign automaker. But now, as the tide has turned and everyone's pivoting towards electric vehicles, the local automakers, the local startups in China are able to leverage what they're able to do when it comes to software and technology, and the consumers are pivoting that way. And Volkswagen has been really slow to sort of pivot in that direction. And they've really struggled on software,
Now, Herbert Diess was chased out as CEO, but I kept seeing headlines like spending $50 billion to build EVs, and I think Rauvald wrote a story back in the day that Diess wanted to start a huge software company within Volkswagen, and he was spending almost $30 billion on that. What happened to all those efforts?
Oh, yeah. Those efforts are still underway. The software unit, Cariad, is still alive and kicking, a bit not barely, I shouldn't say that, but all of those efforts, they haven't all been for naught. Cariad, the software unit, is still creating two of the big coming platforms for Volkswagen, the two big EV platforms, one for the premium brands, Porsche and Audi, and then one sort of like a catch-all platform that can be tailored to across all of the 10 brands. The problem was Cariad, the software unit, just took on too many tasks at the same time, and they were overloaded, and they weren't able to deliver non-glitchy software, especially when it came to the ID series for Volkswagen. So basically, Llama came in and he said, okay, hold up. We need to clean house a bit. We need to refocus our energies. And he's put in a new CEO at Cariad. He's created this 5-point plan of trying to get things in order. And he's also taken a page from the playbook of Porsche and sort of saying, listen, compared to my predecessor, I'm not afraid to go into third-party partnerships to get the best technology here. And he's really saying, yes, we will stick with our software strategy with Cariad. Yes, we will continue to deliver the platforms, the EV platforms for Audi, for their Q6, for the Porsche Macan. But also moving forward, we're not going to be afraid to partner with other people who have been doing this a little bit longer or have more expertise that we currently don't have.
So, Monica, just give us the kind of your sense of how the European automakers in general are pursuing this transition to EV. Is there a sense that they're on the cutting edge or they're lagging? Kind of where are they?
Oh man, that's a really tough question. Volkswagen was sort of the first European car maker to, jump in feet first into the EV, push. That all came as a result of the diesel scandal, and they were sort of, nudged a bit in that direction, right? But they've really been, they've sort of started out, they were the first ones to move forward, and then you had Mercedes and BMW sort of moving forward on that. The difference, I think, there is you have Mercedes and BMW that are more in the premium and luxury market, right? And so they're able to, it's the same thing with Porsche. They're still able to leverage their ICE sales, their combustion engine sales, use that to fund partially this push into EVs.
Glorious machines.
Yes. Indeed.
Monica, are the other car makers as active in China? I remember seeing some stories about some of the Stellantis brands, pulling out. Now, maybe it just wasn't a big enough market for those individual brands, but surely Tavares has to be worried if it's this important to Bluma.
Yes, some car makers are more active in China than others. Stellantis, I think, you're right, has moved away from China and is focusing his efforts elsewhere. I think the concern for Tavares more is what do the Chinese car makers mean for Europe when they come over here? Because the Chinese makers are focusing more on, sort of these smaller vehicles that are maybe more affordable. And if the European car makers can't focus on that segment, there's a real fear among some analysts and automakers that the Chinese makers could capture a segment of the market that the European makers are not focusing on. And so that's why, there's this drumbeat, at least from Tavares, that we need to make these vehicles more affordable. We need to get regulations. We need to get, government policies on board in Europe to make these cars more affordable in Europe. But in terms of how other car makers are doing in China, it's really, Volkswagen was at the top of the list for a long time, but you have BYD that's really at the top now when it comes to EV sales, and then you have Tesla, who certainly can't be forgotten. And those are the two big players, at least to my mind.
All right, Monica, great stuff. Great catching up with you, Monica Raymond, Autos industry disruption reporter for Bloomberg News.
Joining us out of Berlin,
right in the middle of
my old office.
Your old beat, right?
Yeah.
Exactly right. Where's your car these days, your Challenger? Do we know where it is?
It is, supposedly it's scheduled for production in Canada.
Okay.
But they haven't sent me the actual production confirmation yet, so I'm still waiting. And in the meantime, I'm looking across like Auto Trader, and maybe I'm thinking maybe I should go for bright orange instead of dark green. I'm not sure.
Really?
Yeah.
Oh, so you haven't selected even that yet. All right. It's just supply chain still an issue in the auto industry. Matt's been waiting for this Challenger with this Scat Pack
all year long
for like a year. I don't know what's going on there.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
Matt Miller, Paul Sweeney here in our Bloomberg Interactive Broker studio. And I forgot to mention, we are simulcasting on YouTube.
So people see me.
So people can see that Matt's actually here. He's back after a little hiatus in the afternoon. So you can check us out on YouTube. Just search Bloomberg Global News. All right, this has been, in addition to just a week of, I think, 165 of the S&P 500 companies reporting earnings next week, and I think 172 next week. So super busy in the earnings season. But we've had a lot of central bank movement over the past couple of days, including the Fed yesterday and the European Central Bank today. So let's kind of break it all down and see where we are. Anika Gupta joins us. She is the Director of Macroeconomic Research, Equities and Commodities for Wisdom Tree. She joins us via Zoom. So, Anika, boy, what do you make of kind of what we've seen coming out of these central banks over the past 24 hours?
Yeah, it's been really interesting, Paul. On one hand, we have both of these central banks, be it the Fed as well as the ECB, keeping their optionality open. I think they've tried to, indicate that they have covered quite a bit of ground on the inflation front. The only difference between the Fed and the ECB is the Fed is facing an economy which is a lot more resilient and stronger based on the consumer strength, whereas in the Eurozone, the ECB is faced with a situation where they have made a lot of progress on inflation, yet the recent indicators are pointing to growth slowing down. So we are headed for a period of stagnation before we actually get that rebound back into a growth phase. So I think the ECB gave out a lot today at the meeting, where some of the statements that were made when President Lagarde was asked, is there still more ground to cover? And she clearly said at this point she wouldn't say so. And I think that indicates this looks likely to be the last hike. But clearly they've kept that optionality open where there's so much additional data to come out until the September meeting that anything could influence their decision. But as of now, I would say for both central banks, it looks like this is the last one in their tightening cycle.
Well, Chairman Powell referenced the data points that he was looking forward to between now and the September meeting. There are many. We got some this morning, though, that were pretty darn impressive. GDP came out at 2.4% for the second quarter. We were looking for 1.8% in our survey of economists. Personal consumption, consumer spending, also higher than anticipated, 1.6%. And you got the core PCE, which is the Fed's preferred gauge of inflation, not nearly as bad as we expected at 3.8% rather than 4%. So this looks pretty darn Goldilocks to me. How do you think it looks to Chair Powell?
Well, you're absolutely right, Matt. I think we've even seen the IMF echo a similar viewpoint where the US has been and is proving to be a lot more resilient than investors expected at the start of the year. And I think, given the fact that the U.S. economy has been that resilient, it does open a Goldilocks environment because we have seen progress made on inflation. And given the fact that the growth has been quite resilient, it should put the Fed in a situation where they could hold rates at current levels. And then that expectation of them, beginning to cut just gets postponed further down the line.
So, Anika, you're based in London, I believe right around 1 King William Street, which is just right around the corner from Bloomberg's European headquarters at Queen Victoria Street. Talk to us about inflation. Inflation in the UK, inflation across Europe. Christine Lagarde called that out as still higher than she would like to see. Why is inflation in across Europe maybe a little bit stickier than maybe what we're seeing here in the US?
So I think what seems to be quite different in the UK is largely due to more structural factors. I think Brexit in a big way has contributed to inflation being a lot stickier. That being said, the most recent inflation report has shown a small sliver of cooling. But I think Brexit has a very important role to play as to why the UK seems to be the laggard in actually bringing down that inflation fight. But for the Eurozone, what seems to be holding inflation up quite strong has been the strength in the labor markets. Wages have been rising. And I think that has essentially, from an income standpoint, helped the Eurozone consumer actually have a better and a higher purchasing power. So you've got wages rising, you've got inflation beginning to come down, be it headline inflation feeding into lower core inflation. And that is just, from an income standpoint, making the Eurozone consumer putting them in a much better position. So I think those two factors really stand out. And that's one of the reasons why our fight on inflation has been a bit of a laggard compared to the US.
So you were talking about how rate hikes are going to get pushed back, but I noticed on the dot plot that we're expecting, at least the Fed itself is forecasting, a full percentage point of rate cuts over the next year. Why do you think that the Fed's forecast differs so much from what Jerome Powell, will say at any given press conference?
Well, I think it's purely based on the fact that the economy has been fairly resilient. There are also risks lurking around. We've seen commodity prices over the past few weeks actually rebound. We've seen, the escalation between Russia and Ukraine actually increase, with Russia pulling out of the Black Sea grain deal. And so as a consequence, we've seen agricultural prices within the commodity spectrum also rise. And I think central bankers have taken note of that these risks are there in the horizon. And for the US, it's quite important because, we're seeing growth quite resilient. For the Eurozone, we are seeing growth being quite tepid. Forward-looking indicators are saying there's weakness ahead. So I think the ECB is right to say that they've covered quite a bit of ground. There isn't all that more left to do so at this point in time. But for the US, as growth seems to be a lot stronger, and the consumer appears to be a lot more resilient, and you're also seeing a few inflationary concerns rising on the horizon. There's always the risk that the economy just does better than expected, and that gives less need for Powell to actually have to intervene with rate cuts.
What does that mean for the FX picture? I mean, we had seen the dollar hold strong for so long this year against all predictions, and then it came the Bloomberg Dollar Index came tumbling down a couple of weeks ago. Now it's on a steady climb higher. And the euro's trading at less than $1.10, right? The pound is trading at less than $1.30. What do you think the growth differential means for the currencies?
It has a very big impact. So what we've seen is the dollar responds to two important factors, one being the growth differential and the second being relative interest rates. Now, clearly, until now, the dollar was weakening because interest rates in the rest of the developed market world was actually rising, and interest rates expectations for the Fed were actually declining. So there were expectations for them to pause or cut. But the way things are evolving with the strength in the US economy, we're now seeing relative interest rates move in favor of, continue to move in favor of developed market economies as opposed to the US. And at the same time, we're also seeing growth prospects in UK and Eurozone actually deteriorate compared to the US. And hence that seems to be the dominant factor in play right now, which is why the dollar has been strengthening.
All right, Anika, thank you so much for joining us. Really appreciate getting your perspective. Anika Gupta, she is the Director of Macroeconomic Research for the Equities and Commodities business at WisdomTree. She is based in London. Again, we had the ECB this morning, the Fed yesterday. Rate increases, yes. The market's kind of reading into it that they may be perhaps the last of the rate increases, at least for now, when we're seeing some reaction in the markets. S&P 500 up 0.5%.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'd like to begin with your newest rules that you just unveiled yesterday, putting restrictions on brokerages and money managers and their use of AI to interact with clients. What is your primary concern with the adoption of this technology that you're trying to address?
First, Kaylee, it's good to be with you. But talking about this, I think that predictive data analytics, including artificial intelligence, is the transformative technology of our times, and every bit as transformative as the internet or mass production of the automobile 100 years ago. Now, what are we trying to address? When an investment advisor or a broker works with you as an investor, they're not supposed to put their interest, the advisor's interest, ahead of yours, Kaylee, as an investor. Mm-hmm. And so what we're trying to do is make sure that the technology aligns with that standard, that the technology that can predict about each and every one of us so much about how we might react to a little behavioral prompt or a little nudge, how we might react, that they're putting our interest as an investor in the right place and not putting themselves ahead of it.
And of course, the AI move wasn't the only one you made yesterday. You also just approved a plan to require companies to disclose cyber breaches within a 4 business day timeline. Why is that the appropriate time frame?
Well, if I could just give a little bit more, it's about material incidents. So if a company lost a factory and that factory is wiped out and that factory is material to its operations, let's say because it's lost to a hurricane, investors need to know when they're buying and selling the stock. In a similar way, if you had a cyber incident that management determines is material, hundreds of millions of files lost or something, or compromised, investors benefit from that disclosure.
But giving businesses just 4 days to disclose that.
That's what we have in our rules today. Currently, 4 business days if you have, like if that factory, was wiped out by a hurricane, to put out the material information. And so that's consistent with rules on the books. And by the way, many companies have been making such disclosures. Some haven't. It's been fragmented. And we thought it was important to bring some consistency to it around these material events.
Mr. Chair, Danny Berger here in London. Really wonderful to speak with you today. Now, on some of your proposals when it comes to equity market structural reforms, you joined Bloomberg TV back in March. You said of market participants, give us your best advice. Tell us what you think. What did you get? What was the best advice you got?
Well, we got, in terms of equity market structure, thousands of comments. So I would say that what we're about at the SEC is trying to drive greater efficiency and competition in those markets. So when you send an order into a broker, that you feel that you're getting best execution on that order, and also that the markets themselves are competitive. So one of our rules was about sort of leveling the playing field between the lit markets, the so-called New York Stock Exchange and NASDAQ and so forth, and the wholesalers or dark market, which at times the dark part of the markets are between a third and a half of the market. So it's trying to bring some level the playing field and ensure that investors are getting best execution in these markets.
What about in terms of the feedback you got? Are you taking any of that on board? Would you change anything considering what you've heard so far?
Well, we do that as a regular basis. When we make a proposal, we put it out to public comment and get feedback. And we put out 4 separate proposals for different aspects in the markets. And I think we've gotten 4,000 to 6,000 comments on each of them. So, and we naturally consider it, and the staff makes recommendations about adjustments.
Okay, I'd like to discuss another proposed rulemaking that has received a certain degree of feedback, your climate risk disclosure, specifically as it relates to Scope 3 emissions. What conversations are you having around Scope 3 in particular?
Well, we've heard a lot from the public on this, but to set the stage, companies today are making disclosures around climate risk. In fact, well over half of the top 1,000 or so companies currently make climate risk disclosures, including greenhouse gas emission disclosures. So we're trying to bring consistency to that. And yes, for investors, that they can compare comparability for that. You asked about one part of greenhouse gas emissions, so-called Scope 3, which is about the supply chain. And
right, where a lot of the concern lies.
And so we've heard from a lot of commenters about that, both from issuers and investors. We understood when we made a proposal that this was not as well developed, so-called disclosures around supply chain emissions. And so we're taking that into consideration. And as I just chatted with your colleague, the staff considers what to recommend upon adoption and whether to make adjustments.
So we could see a change there, potentially.
Well, just as in the equity markets that I talked about, we do take these comments seriously, Kaylee. It's a really rigorous exercise. In climate, we got 16,000 comments.
Wow.
So it's a lot to sort of sort through, but the Scope 3 issue is one that we've heard significant comments. Interestingly, we've heard from, I think, 48 or 49 of the state farm bureaus, literally about, well, what does this affect? And we only oversee the public companies, these 6,000 or 7,000 public companies. That's it. We are a disclosure-based agency. I often say we're merit neutral. We're not this disclosure is about something already happening between investors and issuers. And it's an important thing to bring consistency. It's not about those farmers and ranchers who thoughtfully wrote us. So we've heard.
Okay. I'd like to move to a different topic, which has gotten a lot of attention lately, crypto. Specifically, a ruling that was made in the Ripple case that XRP is only a security when sold to institutional investors, not so with retail investors. I know you've previously said you were disappointed by that ruling. The SEC has also said that it intends to seek further review. So does that mean you are going to appeal it? Can you elaborate on your thoughts around that ruling?
Kaylee, great question, but the commission, I'm one of 5 commissioners. Mm-hmm. The commission has not acted on that, and if the staff makes a recommendation, we'll have a discussion of it, and we'll take it up then, but I don't really have anything more for you for that.
In the meantime, as we wait for this, what does it mean for your efforts around crypto, for your efforts to try to protect the consumer in these areas? Does it complicate it?
Look, this field of crypto investing, a lot of investors should be aware it's not only a highly speculative asset class, it's also one that they currently should not assume that they're getting the protections of the securities laws, even though the securities laws apply to many of those tokens, without prejudging any one. But you as investors are not getting the full, fair, and truthful disclosure. And the platforms, the intermediaries, are doing things that we would never in a day allow or think the New York Stock Exchange or NASDAQ would do. The platforms often are commingling and trading against you and have market makers that are on the other side of your trades. And we don't allow that in the rest of our securities markets. And the securities laws are there to protect you. And that's right now, this is a field rife with fraud, rife with hucksters. And there are good faith actors as well, but there are far too many that aren't.
And of course, you've brought cases against crypto exchanges on this point. But do you need to change tactic? Does it change anything for those cases? Again, this XRP ruling.
Again, I'm not going to go into any one ruling, but I think that the securities laws are clear. And if the public is investing in your project because they're anticipating profits based upon the efforts of that project or those entrepreneurs, Congress painted with a broad brush. And I would ask you this, is like when you look at a token, you can find a website, you can find a CEO, you can find a Twitter or X feed, whatever it's called these days. And there are entrepreneurs behind many of these projects without, again, prejudging any one of them.
Elsewhere in the crypto space, I'd like to discuss the spot ETF, because we have seen a wave of filings recently from BlackRock and others trying to finally achieve this. One has never been approved in the U.S., just a futures ETF. It seems like everyone thinks there has been a tone shift, that something is different this time around. What do you make of that wave of recent filings? Has anything actually changed for the SEC?
Well, Kaylee, it probably won't surprise you. Those filings do ultimately come up to a 5-member commission, so I can't prejudge any filing. But back to your colleague, as I said, this is a field that there's a lot of non-compliance in this field, and that the platforms themselves, where trading is occurring of various crypto tokens, though some of it comes under the securities laws, currently they're not necessarily compliant with those time-tested protections against fraud and manipulation.
Okay, on the subject of securities laws, which obviously is your purview at the SEC, just yesterday, House Financial Services Committee passed through committee legislation on crypto market structure that would actually give more authority in regulating this space to the CFTC. Still has a long way to go if it were to become law, but what is your thought on that legislation?
I sort of share my thoughts directly with members on the Hill.
And what have you told them?
I understand your question, Kaylee, but I think that those members on the Hill would appreciate if I continue to share my thoughts directly with them.
Not too dissimilar, Mr. Chair. I wonder if there's some degree that you would want a wider scope when it comes handing down fines to bad actors. Do you think it would be helpful to have higher fines, again, in order to discourage certain behaviors?
I would say this. We have good tools at the SEC around not just penalties, but also what's called disgorgement to give back ill-gotten gains and so forth. But if you're asking whether we could use more authorities, I would say we need more cops on the beat. We need more resources. Our agency is just the size we were in 2016. We actually shrank. We've kind of come back, and yet the markets have grown so significantly in those 7 years.
And finally, as you say, you need more resources. I wonder how you feel about the ability of you to get those things from this Congress in particular, when you have certain members of Congress who have said things like introducing legislation to remove you as chair, referring to tyrannical chairmen, including the current one. Does it make it more difficult to do your job when there is that kind of political rhetoric out there in your efforts to protect investors?
We work closely with Congress and individual members, and I look forward to those public debates. I think that we're really an important agency. The capital markets really wouldn't work without cops on the beat and rules of the road. Just, think if you're watching soccer matches. If there were no refs on the field, what would that soccer match look like? It would look first more like rugby, and then after a while it would really look worse, and fans wouldn't come to the field anymore, or well,
I can
most
see that
wouldn't.
vision.
So I really do think that it's important to have this agency, and we're part of these well-regulated markets.
You're listening to The Team. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
We're talking about AI in the context of financial services, businesses, and markets. It's also a big deal basically for every other industry out there. And what does it mean for a lot of these industries and people that work in the industries? Think Hollywood, writers, that's come up in their discussion. Rania Sedholm joins us. She is a managing partner of Sedholm Law Group. She joins us live here in our Bloomberg Interactive Broker studio. Thank you so much for joining us. So what are some of the early thoughts within the legal community about AI? 'Cause I don't know where this thing goes.
Thank you for having me. Well, AI is definitely a hotbed topic, and there are so many issues to discuss. We don't have time. We can speak for days. But, one thing that I'm concerned about as an attorney is the use of AI. While I don't think there's going to be a nefarious use in this labor dispute, as the technology becomes more prevalent and accessible, who knows what anyone will actually be saying? Because once I've captured, your image and your tone using AI, I can manipulate it to say anything. And so this is going to raise a lot of eyebrows.
And it's going to raise, I guess, a lot of lawsuits, right? I mean,
yes.
For the legal industry, this is going to be a big moneymaker.
It very well can be. Another legal issue that we're talking about is what kind of intellectual property rights exist when you use AI. Right now, the answer is none, because it only protects original works created by a human being. And so there's a huge discussion now as to what is the purpose, beyond making money, of course, right? Mm-hmm. You create a television show or something else using AI quickly, and you make money when people watch it. Okay, fine. But do you actually own it?
Yep.
Likely not.
So what are the, for example, just in this writer's strike, forget the actors for the moment, but just the writer's strike, I mean, that's intellectual property that they have created. And I guess the question is...
There are two issues there, right? On the one hand, they don't want anyone using the IP that they've created.
Right.
On the other hand, they're worried that AI is going to come in and write new material instead of them doing it.
Yes, exactly. And depending on what their current CBA, collective bargaining agreement, says, they may have already relinquished all rights to use of those materials. I don't know.
They've already written. I mean, for example, Sarah Silverman wrote a book, and it's been, I guess, accessed by OpenAI. in training, I would guess.
Yes, that's exactly right.
And now she's suing what? OpenAI?
She's suing OpenAI and Meta. And it's for copyright infringement, because one of the ways you can infringe upon copyright is to utilize someone else's work to create a derivative work or maybe a sequel, in more common vernacular.
So, but Rania, this isn't breaking new ground. This isn't, we don't have to create any kind of new framework to address these issues. The law is already there and it's clear.
Yes, that is true. I think some of what is happening now is consumers are talking about it. Are we as consumers going to accept these AI-generated copies or movies or television shows or not? Are we as consumers going to accept AI-generated anything? I mean, this is really a kind of an existential threat. Almost any job, if you think about it.
But again, those are two issues, right?
Two
On the one hand,
issues.
We're not going to accept theft. If a company uses copyrighted material and doesn't, follow proper procedures there, i.e. paying some kind of royalties to Sarah Silverman in this case, that's not okay. Correct. On the other hand, if OpenAI writes a new comedy special without infringing on anyone's copyright, which I don't know how that would happen because they have to train the model. But
exactly. I don't know how that would happen either, because AI is only as smart as the information you provide
That's
to it.
That's a very good point.
So I'm not sure
I just talked myself into understanding what you were saying.
Glad to be of help.
So is there a sense, Ronnie, that the legal industry, I mean, hopefully they're going to do better than our regulators in Washington, but is there any sense that is there any academic work being done in the legal industry about how to look at this stuff from a legal perspective?
I think it's extremely exploratory. So just like any technology, some use of AI will be beneficial to all, and some of it won't. And in fact, you're likely using AI now without even knowing, right? Because it's part of a lot of systems that you're currently utilizing. And so I think there has to be some regulation around how to use it and when not to use it. And there should be also some contractual provisions that attorneys write. So I represent some celebrities and some influencers, and when we are working with production companies or others, they'll ask us to release the likeness, the tone, the image of the celebrity in perpetuity, in perpetuity, and in any medium known or unknown, or soon to be known.
That's a wide scope.
It's a very wide scope. So I think the attorneys, they have a power of a pen, and when the other side says this is a deal breaker, you should just take a step back and ask yourself, is it really a deal breaker, or can we carve out something to keep the integrity of the image of the person?
Any idea how this writer strike will play out? Because I'm not sure Well, if I were a media company, I'd be saying, hey, guys, I'd love to give you a cut of the streaming revenues or whatever, but I don't know what they're going to be. I don't know how this
The
business
economic
is
side is unclear. I heard your interview yesterday with, I think she was the head of a guild.
Yeah, the Writers Guild.
And she, I mean, her insistence is that these streaming companies are just cashing in hand over fist and making billions and billions and billions in profits. But as we know from watching the market move every day, investors aren't sure about that.
No, exactly. So any sense of how this might play out? It seems like it could go on for a long time.
It can go on for a long time, but I think as more people feel the pain, there'll have to be some compromises. Right now, it seems like everyone has their dukes up, and nobody cares about the fringes. But this strike is not only affecting writers and actors, it's affecting so many other people in the profession tangentially.
It reminds me tangentially of the lawsuits we saw flare up over NFTs.
Yes.
And I wonder, did we ever sort that out? For example, Quentin Tarantino wanted to make an NFT, I think, of his script for Pulp Fiction, right? But the studio said, no, hang on a second. We own that script, even though he had the physical paper copy in his hand. So there were similar copyright issues coming up around crypto.
Yes, well, the copyright laws are the same. They're applied across the board. But again, a lot of this can be taken care of contractually, hence this strike. But here, neither side seems to be communicating very well, and that always ends badly.
All right, Rania, thank you so much for joining us. Lots of issues out there for you guys to figure out. Rania Sedholm, managing partner, Sedholm Law Group.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
C-suite conversation today. You thought that SPACs were kind of outdone?
Yeah.
They're still getting done out there, and we've got one coming up here. Derek Alberly joins us. He's a board member at LeddarTech, and LeddarTech is to go public via a prospector SPAC at a $348 million valuation. Derek, thanks so much for joining us on Zoom here. Talk to us about LeddarTech. What do you guys do?
Well, thanks for having me, and good morning. In addition to being on the board of LeddarTech, I'm also the CEO of Prospector Capital, the SPAC that has signed a business combination agreement with LeddarTech. Look, at LeddarTech is a super interesting company. It's in one of the largest segments of automotive software, which is ADAS software, which is projected to grow to about $42 billion by 2030. And we fundamentally believe that they have a leading position in a disruptive portion of that software stack. And as the market moves to kind of new architectures for ADAS, we're going to see more sensors in the vehicle and the need to scale. The architecture that's being used today is just not going to get there. So the industry is looking ahead to the next generation, and that's something called AI-based low-level sensor fusion and perception, and that's what LeddarTech has been working on. My background before Prospector and LeddarTech was actually a long time at Qualcomm, and as you likely know, they've had pretty good success in the last few years in automotive. And while I was there, we were planting a lot of those seeds. And I've been very interested in this space for a long time, and we were very excited when we found LeddarTech and realized the leading position they were in.
So what's your experience? I mean, obviously very positive from your perspective in the SPAC wrapper, but do you think you would do it that way again?
Yeah, look, I think there's been a lot of puts and takes in the SPAC market over the last 2 years or so. We felt it very important from the outset to find a company that we could bring to the market at an attractive valuation, had a large market opportunity ahead of it, and fundamentally where we could help actually get that company through the transition to public markets and scale the business. And that's what we believe we found here with LeddarTech. And I think those are the types of deals that have performed well in the SPAC market. There have been some ones that have been less successful, but if you look back at the autonomous vehicle space, you look at the auto tech space, the SPACs have been a pretty effective vehicle at raising capital for these companies, over $2 billion raised, since 2020.
Why do you think, Derek? Why do you think that SPACs have been so focused on the automotive industry?
Look, I think it's an industry where patience is required. I think the adoption curve can take a while. And I think some of it's a little bit harder to digest just through a traditional IPO, but with the right sponsor group that understands the industry and is going to put the time in and take a longer view, these opportunities can be quite successful. And they've also it's been a good vehicle for raising capital post de-SPAC or IPO. There's been over $1 billion raised by these companies since then. So as we look ahead, this transaction will, bring the company to the public markets, open a wider variety of opportunities to fund the business as it scales into the future. And, I think that's exactly what they need to get to the next step.
Derek, just as you think about the autonomous driving technology, give us a sense of where you think it is right now in its development, and how long will it take to really become commercially viable for a lot of these big automakers?
Look, I think there's still quite a journey to get to full autonomy. But the thing that we really liked about LeddarTech and do like about LeddarTech is this is not a bet on when autonomous vehicles will be ready for commercial adoption. Their technology applies today to traditional ADAS systems in the cars, so advanced driver assistance systems. And through a combination of consumer preference and regulations that are driven in the US and Europe, the adoption for ADAS, including entry-level systems, is forecast to really explode over the next few years. So their technology addresses a technology that's in the market today. But as it scales up to higher levels of safety and more sensors are needed, they have a huge advantage there. As well as automakers are pushed to put in ADAS even into lower level cars, you need to have a more cost-effective solution there. And their technology and software actually allows automakers to get 2 times the level of performance at 30 to 40% lower cost compared to what is in the market today. So it's potentially a very large game changer here for driving adoption of ADAS. And eventually, as we get to autonomy and the number of sensors on the car proliferates, their technology just becomes more and more valuable to the OEMs.
And Derek, just 30 seconds left here. Just when do you expect to close your transaction, and then just kind of how does that all look?
Yeah, so we've raised $43 million in PIPE capital so far. We're going to look to try to raise some incremental PIPE capital between now and close, which is, I think, we feel good about, given there's only been about $80 million of PIPE capital raised in the first 25 deals announced this year. And in terms of closing, we're looking at Q4 of 23, hopefully earlier in Q4 versus later.
All right, great stuff. Derek, thanks so much for taking the time to join us. Really exciting technology there.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Want to dive even deeper into Meta's earnings report? CEO Mark Zuckerberg saying, look, quote, we continue to see strong engagement across our apps with the most exciting roadmap I've seen in a while. Our investments in AI will continue, and we remain fully committed to the metaverse vision as well. Let's dig in further with Meta Chief Financial Officer Susan Li joining us. And it's not just Mark finding things exciting. Investors, analysts upgrading, exciting economy for the world at large today, it feels, here in the United States. How excited, Susan, are your clients right now? How resilient is this digital ad spending?
Well, first of all, thank you, Ed and Caroline, for having me. It's a pleasure to be with you guys and with your viewers this morning. You noted that we reported really strong Q2 results. We're really happy with all of our execution efforts across our core user and engagement metrics. Obviously, the reacceleration in our ad revenue, which we've been talking about, and which we think is the reflection both of an improvement in the macroeconomic landscape, which the digital ads market is so closely tied to, along with our own efforts continuing to invest in and execute on quarters and years of work in making sure that our ad systems are performing well, that we're delivering measurable results for our advertisers, and we really have seen those results bear fruit. So that's something we're really excited about in Q2. We also talked about how our year of efficiency work is really setting us up for success going forward. I think it's put us into a place where we have a leaner cost structure, which will serve us well as we plan for the future. And it's also enabling us to move faster, to build more and ship more quickly new products and experiences in service of our customers. And so Mark talked about this yesterday on the call. Threads is a really good example of that. It's something that we built with a relatively smaller team on a tighter timeline, and I think is a good reflection of the year of efficiency paying off for us. Finally, the last theme I'd highlight from our earnings call is around 2024. We have, I think, a lot of compelling opportunities to invest in. We talked about our AI investments and how that will flow through into infrastructure costs. We talked about hiring top-tier technical talent as we evolve our workforce towards a more technical mix. And then, of course, our longer-term ambitions and vision for Reality Labs and for the metaverse.
AI also seems, Susan, to AI recommendations on the timeline to have a real impact on engagement, particularly on the core Facebook platform. How much is that a driver behind the forecast for the current period of $34.5 billion in sales?
It's a great question. First, I want to say we have been investing in AI for a really long time. We often use the phrase core AI to talk about the work that's been powering our ranking and recommendations engines, which are really the foundation of both our organic recommendations for the content that you see, along with the ads work. And in particular, one of the big drivers of growth that's been both strong on our platforms and increasingly incremental is around recommending content from accounts that you don't already follow. We often call this unconnected content. And that's been really good for core engagement trends. And then, of course, the AI investments, as we put GPU capacity towards our ads, ranking, and recommendation systems have really paid off. So I think that's really translating both into the results that you've seen. It's part of what factors into our guidance, along with, of course, a big range of possible macroeconomic outcomes. At the same time, we're really excited about a newer opportunity ahead of us in the Gen AI space, and that's really around building compelling new consumer experiences. Mark talked about some of the things we're working on the call yesterday, making it easier for people to create better, more individualized content, and then, of course, also making it easier for businesses to communicate with the consumers that they want to reach. That is newer for us. That's not factored into our revenue guidance or our revenue outlook, in any meaningful way. But it's something that we're really excited about the opportunity to build new and compelling experiences, and we think it'll be an important part of our future.
Susan, why did Meta change its mind about charging cloud providers for access to Llama 2?
I'm not sure what you mean by changing our mind. We've made Llama 2 free and widely accessible. There are a small handful of really large cloud providers that we're working on specific arrangements with, but broadly speaking, we expect this to be free, and we want it to be accessible to a really wide range of possible use cases.
Cloud providers, will they be charged anything?
This is a place where, again, with very specific cloud providers who have very large user bases, again, we're working on specific arrangements with them, but it's not something that we broadly anticipate charging for.
And of course, we're all waiting to see when you turn on the money funnel from Threads. I'm interested as to how much inbound you're getting from clients. How many want the capacity to start advertising alongside Threads at the moment?
We're really very pleased with Threads. It's a new standalone app that we released earlier this month, and we're where it is in both user growth terms as well as engagement and retention trends is certainly ahead of where we would have expected for a brand new standalone app. But it's incredibly early in its life cycle. This is not something that we expect that we're going to monetize in the near term. We know when we launch new consumer experiences that there is a playbook around all of the product foundation work that needs to be done around core features that users will ask for, being responsive to things that users are looking for in the product, scaling it over time to a much larger user base, focusing on driving increased engagement and retention. Those are all things that we're going to need to do, in advance of thinking about monetization. But it's a playbook that we've executed multiple times, and we're excited for the opportunity to do that again here.
Susan, I think I'm right in saying you were Facebook employee number 400 and something, 408. How has the launch of Threads compared internally to bringing in Instagram, WhatsApp, the launch of the hardware business and Quest?
So I joined then Facebook back in 2008 when there were around 400 people here. And so I've seen us launch a lot of things over the course of that period. Now, some of those examples that you mentioned, like Instagram, obviously were already popular apps when we acquired them. But I think that over the course of that time, we've learned a lot of things about how to bring products to market, thinking about the trade-offs between standalone apps or features within existing apps. We've learned a lot in our growth playbook and how to drive engagement and retention. And I think we're going to bring a lot of those lessons to the way that we execute against our vision for Threads.
Caroline asked you about the inbound interest. Your existing advertisers saying, hey, Susan, when can I put something on the Threads platform? I know you're being conservative and careful about the development, and that Mark emphasized a lot of product work needs to be done as well. But how do you see the roadmaps for Threads going? How do you change the product so it is monetizable?
Well, we're excited, obviously, that there is interest, both in Threads, the consumer product, and, of course, the eventual prospect of advertising on it. But it's really just too early, I think, to be very specific about what the ads business on Thread will look like in detail. We're really focused on executing on the consumer experience first, making it a great and productive and friendly place for people to have public conversations, growing it to scale, investing in the features that people want, and we'll get to monetization at the right time.
Of course, us in the media had a field day thinking about the competitive force that Threads is vis-a-vis X, and then we think about the competition more broadly, you versus TikTok, when I'm thinking of the success of Reels of late, when we're actually more broadly thinking about how Meta makes it not just a money spinner, but a culture spinner here, where people start trends, not just perhaps copy them from TikTok and bring them on to Reels. Do you feel you've got that now at Meta?
I think that we've been, over the course of the time that I've been here, constantly focused on innovation. And I think that we've brought that to bear with a lot of the experiences in our family of apps. And at the same time, when there are clear secular trends in the industry in terms of formats or experiences that consumers are looking for, we look to integrate those too. And I think we've done a really good job at executing on both of those fronts. And then, of course, looking forward, I think we're really excited about the innovation opportunities ahead of us with Gen AI. We think we're industry leading here. And then, of course, over the very long term with our vision for Reality Labs and the metaverse.
We are, of course, with the Meta Chief Financial Officer, Susan Li. We're welcoming her across TV and radio with our audiences. And Susan, everyone started talking about everything apps. Now, I know you're about the money, not always developing the product. But do you think about everything app as Meta? Is there a race on to ensure that we can build that here in the US and you'll be part of it?
It's a great question. I know that there are other regions around the world, in particular Asia, where there are apps that have gone down this model. That's not a model that we have right now. We haven't seen that use case to the same extent in North America. But, I would say that we're really invested in the opportunities that we have ahead of us across our family of apps right now, including Threads, which is the newest standalone app in our portfolio. And then there's just a lot that we can do to make the experiences across our family of apps richer and more engaging with the investments that we've made already in AI, and especially recommending content that you don't already follow. And we know that that's brought richer content experiences to people, is growing engagement across the apps. And we'll release, we'll be releasing features over the course of the next years, but we're really excited about what we think that this is going to bring to bear for the consumer experience, and of course also eventually for businesses to connect with consumers across the family of apps too.
Susan, investors were sanguine about the idea that expenses could creep up. I wonder if you just tell us what your priorities are, where you'll invest in talent, in the metaverse, whether your investments will be on the content side or the hardware side.
Great question. We talked about this a little bit on the call yesterday when we gave some color into the 2024 outlook. The three themes that I really want to talk about there are, first, we expect that our infrastructure costs are going to grow because of the investments we've made in AI, building GPU capacity, that will go towards both the core AI work and the ranking and recommendation engines that I talked about, along with the new Gen AI investments. So that's a place where we're investing certainly in a lot of hardware, along with the infrastructure, such as data centers and network equipment that you need to support that. The second area that we talked about is we are evolving our workforce toward a more technical mix, and we want to hire top-tier technical talent where we can towards some of our most compelling opportunities, including AI and machine learning engineers to work on the AI efforts we talked about. And so that's a place where we are going to be investing, but we're going to be doing it in a very thoughtful way, making sure that we're really focusing on the core priorities and making trade-offs where appropriate.
Susan,
the third thing that we talked about is on the Reality Labs side. That's certainly a very long time horizon and ambitious vision, and we're going to be investing and deploying capital toward it.
The capital coming from that you already have, are you looking at the bond market? Are you looking at raising more funds?
We certainly generate enough free cash flow right now for us to invest across the organic opportunities ahead of us that we see that are compelling. We have been raising debt. We did earlier this year, just as we're evolving our capital structure going forward. And that's something that we'll continue to look at and I think do on a measured pace going forward. But in terms of thinking about the capital available to us now, we generate a lot of capital that we're always looking to allocate across the organic opportunities that we have, and we've talked about some of those, and then, of course, shareholder returns.
Susan, really quickly before we lose you, how do you and Mark split up responsibilities at the company? What's it like working with Mark?
I've had the privilege of working with and learning from Mark for 15 years here. Obviously, as CEO, and as a product visionary, he really shepherds the product roadmap and has defined the long-term vision for a lot of the things that we're investing in with incredibly ambitious goals. And I think that's a tremendous and powerful motivator for us. And I try to make sure that we have the financial frameworks and targets that are going to enable us to invest against those things. Innovation isn't free, and that's something that we're very mindful of. And we recognize that, especially against some of our longest time horizon ambitions, we have to earn the right to put capital towards those things in the way that we do. What I will say, having worked with Mark for such a long time, is he's tremendous at adapting to the time that we're in. And so whether that was leading a 400-person startup when I joined, whether that was overseeing our transition to the public markets during the shift to mobile, or whether that was this past year helping us really retool our cost structure and the way we operate and leading on the year of efficiency, I think Mark is tremendously good at making hard decisions, at acting on them with conviction and looking forward.
Meta Chief Financial Officer Susan Li, thank you so much.
Thanks for listening to the Bloomberg Markets podcast. You can subscribe and listen to interviews at Apple Podcasts or whatever podcast platform you prefer. I'm Matt Miller. I'm on Twitter at MattMiller1973.
And I'm Paul Sweeney. I'm on Twitter at PT Sweeney. Before the podcast, you can always catch us worldwide at Bloomberg Radio.